Welcome to Take Stock. It's 12 o'clock. It is the 6th of November, 2023. Welcome along. Thanks for joining me. And if you haven't subscribed to this channel, please do, because then it shows that we're doing something right, at least. Anyway, John's not here. He's had real big problems, apparently, with the floods and everything. So he's trying to sort out his house, and he's obviously wading around in wellies and mud. So he's not here for a few days, maybe a week, I don't know. So it's got me and you guys. All right, so help me out with a couple of comments. What I want to say today is basically this Bloomberg guy has come out and said the UK is probably already in recession. It needs a Bloomberg analyst to know this? Of course we're in recession. But anyway, they said the research shows a 52% chance that the economy contracted in the third quarter of 2023 and also shrinks again in the current quarter as household spending is hit by high interest rates and rising unemployment. This is what the Bank of England want, of course. They want to really slow the economy down, but they don't really want to go in recession. But it's a surefire way. The only way to bring down inflation is going into recession, contraction of demand, supply, everything. So this is expected. But he points out, this analyst, a recession would be a headache for Prime Minister Rishi Sunak. Well, he's not going to win, is he? But due to fight an election next year, is he going to win that? A recession could increase the chances of the Bank of England pivoting towards reducing interest rates, especially if inflation has come down sharply. It will. It will come down sharply. Simple as that. Last week, the Bank of England said there's a 50% chance of a recession by the middle of next year. More than that. They're not going to admit today 60-40 or 70-30 because they've caused it pretty much. So anyway, let's have a quick look at it. But don't worry about the recession. I'm going to show you a chart now, okay, that shows you why it's not a bad thing. We get the announcement of official recession. And like I said, stats show the worst sell-off in the markets is 6 to 12 months before recession. So if we're in recession, we've had the biggest sell-off, okay? And you can check out those stats. In fact, I get a chart for you this week, and I'll show it to you. A lot of detailed analysis of that, showing that the biggest falls in the market is 6 to 12 months before a recession is officially announced, because that's a lagging factor, because looking back, 2 quarters of contraction, of course, in the GDP. Let's have a quick look at the markets, see what's happening here on the indices. All down apart from the AIM all-share. Yay! Yay! All down. I say all. I shouldn't say yay, because my biggest holding is my fund, which is FTSE 250, 150, 100, 250 dividend paying fund. But Melrose is up, Standard Chartered is up, Rolls-Royce, Entain. What's the fallers here? Croda, Auto Trader. Oh, there's a Society of Motor Manufacturers and Traders here today. The car sales are up by 14%. But anyway, what's your thoughts on this recession? Are you changing? Do you change your investment perspective, how much you invest in the cash you hold, because there may be a recession or not? Or do you not worry about that? Do you think, well, listen, it's a market of stocks. It's a stock market. Yes, there's always opportunities. And in fact, we'll look back at the chart now at AIM going back. In fact, AIM is up now 7 days in a row. It hasn't done this since June. Is it June? Yeah, June. Okay. Let's look at that. Supermono. Love the argument about charts between Justin and Paul on Friday. Paul is definitely a non-believer. I don't see how you can not believe charts. It's nothing spooky. And I keep saying this. It's a measure of money flow. Simple as that. It's the most accurate depiction of money flow going into and out of stocks. Simple as that. So how can you not believe them? It's the truest form of money within the markets, you know. And you can try and guess, if you download a lot of trades on a stock, you can try and guess if it's net buying or net selling, or net demand or not net supply. But the best way to look at it is charts. Simple as that. And every company that outperforms, does very well, the share price has to go above the 200-day moving average. So why not just use that as a benchmark, saying, okay, just avoiding a downtrend. There's all this argument saying, oh, I don't mind, it's a good value company. It'll keep getting better. The value will keep getting better. It can do for months and months and months. And your portfolio can go down for months and months and months. Now, what I'm saying is, wouldn't you prefer to avoid that? Just look at the chart. AI Investor, good day, everyone. I missed the last 2 episodes live as I was on holiday in Bridport. Oh, I say, rock and roll. What have I missed? Cardiff versus Destiny Farmer. I think Destiny Farmer's up. Now that John will be AWOL for a few days, get Paul on and argue with him. It'll be essential viewing. I know we can't just argue every day. We'll discuss that. We're going to have another chat with Paul about that because, and I literally, I'll go through some of the stocks he's picked and said they may be good fundamentally, but you also have to use the extra tool of the technical and also, portfolio management. There's three areas I look at essentially. Okay, let's look at this chart here. Right, this is the AIM share. Okay, I want to share the screen here. So even in fact, I'm not going to keep banging on about this. But that red line there is the 200-day moving average. Okay, it just smooths out the price action over the last 200 days, and so it forms a sort of trend line. And the 200-day moving action, 200-day moving average is seen as the bull-bear line. And you can see essentially, the AIM also didn't touch that since this May 2020, and then look at how many years that so September 2021. So it's not day trading. So it's not day trading. That's a long trend. That's September, May, August, September. That's 14 months went up for, and then it started breaking down. Now it's basically just reflecting the trend in the price here, because you can see let me zoom in. I'll zoom in for you, all you non-believers. High there, okay. Second high lower, second high lower. What's happening there, everyone? It's all about money coming out of the market. Full stop, and that's how you know where the market is. And then of course it's come down. It tried to break it here, come back down again, didn't make any clear headway, and we're down here, okay? We're nowhere near 2-day moving average, so we may have a bounce, a bit of a V bounce, so 7 days in a row here on the AIM share, okay? 1, 2, 3, 4, 5, 6, 7. I think June was the last time that happened. Where's it by? June. Yeah, there we are. 1, 2, 3, 4, 5, 6. Oh, 6. 1, 2, 3, 4, 5. In fact, it's beaten June. And even that, look, went down again. So this is not a trend yet starting. Maybe it's there. I don't know in the last year. But anyway, I want to scroll back to recessions, okay? Recessions. What's your thoughts on recessions? Because we are in a recession, and it's always delayed, of course, because they need 2 consecutive quarters of negative growth on the GDP. And if one of those, an outlying figure that's come through in the data, and it expands for one sort of month or one quarter, whatever, it doesn't do it. But I want to go back to the Great Financial Crash. Let's go back in time, ladies and gentlemen. You can do that in charts. I want to go back in time. But here we are. Oh, hang on. I didn't want to do that. So I've marked on the chart here, okay? This is the Great Financial Crash. Lehman Brothers went bankrupt. That was really the fall off. But look at where you come. Let me just get rid of that. Look at where we come from, right? This is the AIM share up to 1234, okay, in July 2007, all right? And the credit crunch was happening, all that stuff, and they started rolling down. But you could say already, what's happening here? It's breaking down the trend here. It's moving average, 2-day, it hit that, come back down, moving down. Lehman's went bankrupt. Now, the recession was announced here, Q3 2008. Okay, that's because they had 1 quarter of negative growth in GDP, and the second quarter of negative growth, minus 1.7. So Q3 is September. So usually about a month afterwards, they announce the GDP for the previous month. So talking about October 2008. Remember, this is off the back of Lehman Brothers Bank going bust. So we are in a downturn. It went down 30% after that. And then look, from the announcement of the recession down to the bottom here, but 30%. So it's in a big fall after the recession was announced. But remember, at the time, there was banks on the edge of going through. There's central banks trying to step in. The global, banking system was in peril. There was a lot of worry about it. Huge amount of worry. And because without banks, what can you do? Bitcoin, I can hear someone say. But then, look at that. We had the low there in pretty much. The low was December, was it? No, the low was down here in March. We went down in March. But in that low, in fact, let's go to this level here. In that low, March, right to the end of that year. This is why I think 2024 will shape up to be a cracking year. Now, there's no sort of worrying about banks going through now. So that worry isn't there. And central banks stepped in, obviously, of course, there. But that year, 2009, the AIM share went up by 74%. 74%, ladies and gentlemen. That's what I think we're heading into, because it's not about recession. It's about the cost of capital, money. It's very expensive. Central banks have interest rates, 5.25%, 5.5%, what is it? And it's costing businesses a lot of money. So one sniff of that, of a reduction in interest rates, which will happen because we are grinding into recession, unemployment's going up. The bank doesn't want to do that. They have a dual mandate, pretty much, that's stable prices and fullest employment as possible. So when one clashes with the other, they have to take action. And I think inflation is being beaten. If you look last week, we talked about Maersk, the biggest shipping container in the world. That is a huge barometer, a bellwether of economic growth around the world. Like I said, they laid off 3,500 people as sales are right down, demand is right down. That's a huge, excellent measure of activity, global activity. But the markets run with, it's basically stimulated by the central banks. So I think we should have a cracking year in 2024. The recession, you shouldn't worry, because like I said, the reason why it dropped even after the official announcement was because there was still worry about banks going through, a lot more worry in the system. So that's what I think. I think we're on the edge. We're not far off. And you can see banana fall it's had, phenomenal. It's been longer than the Great Financial Crash. But we're not far off. I'm talking not weeks, but I'm talking about months from a big rally, I believe. And probably in 2024. That's my thoughts anyway. So don't get too worried. Don't get too crazy on most stocks. But anyway. Okay, comments. I agree with Justin. Charts have saved me a fortune over those are criticizing don't know how to use them. I think that as well. A lot of people who don't use them don't know how to use them. And it's like anything. I've been looking at charts from the start. In fact, when even .com bugger was looking at charts, but really got into them in 2008, 2009. And I look at many charts every day. And you've got to know. It's like looking. Do you know what? I don't know if you've ever been in for an X-ray or CT scan or something. And then, because my son's got a lung condition, so we've been in several times. And they'll get the results out in black and white or something on the screen. And it doesn't make head nor tail to me. I can't make anything out. And the doctor's pointing out the bits very, you look at this is concerned, this is okay, this is, what am I looking at? I have no idea what I'm looking at. It's just about learning about charts. But I mean, I think if you start off with that, 200-day moving average, it will help you a lot. Any thoughts on CLX, MBH, PSE, NTBR? No, are there any news update? If they are, I want to cover stocks on news here. I mean, John's good chatting around the stocks because so I'm doing all the stuff here. I'll have a look at the charts and stuff, but I won't dig in. I'll just look at the news today. I have a direct debit that pays into my investment account, so I'm agnostic about recession. No recession impacted my investment strategy. Yeah, I mean, same with me as regards my sort of investment fund. I do sort of pay on a monthly basis, and I'm not worried about that at all because over time, it's okay. The US has some great results. The stock market is reflecting. UK is recession, and stock market reflects. So yeah, you should change how you invest in a recession. Having said that, what do you mean? The stock market in America hasn't done well. It's only been the S&P and Nasdaq because of the Magnificent Seven. If you look at if you strip those out, it's flat. And if you look at the Russell 2000, for example, which is like a more accurate figure, it's almost like I suppose over here it's similar to the sort of 5250. This is the Russell 2000, and like I said, it's from the peak down there about 30% down. So the American markets haven't done well. I mean, the S&P will, because 50% of that weighting is those 7 stocks and the Nasdaq. So it's a distorted view of the American markets. If you look at most stocks, they're down massively. In fact, I think one of Paul's he bought a while back. PayPal, look at that. Phenomenal fall. So most stocks are struggling apart from the Magnificent Seven, because there's some areas within in the markets that are opportunities. But I think you've got to be quite discerning in this area. Okay. Let's look at the front page of Vox. I'll go back to some more comments. By all means, comment. What's your thoughts? I mean, I do agree with you, by the way. You do have to change a little bit. Like I said, when a bull market happens, you can literally, it's like shooting fish in a barrel, pretty much. When everything starts to rise, as long as your companies are healthy, they'll cash, they'll start to rise the market. So it's and like I said, the bear market is opposite. Most of them are falling. And so it's a lot harder. Faron stock climbs and advances of phase 2 in blood cancer treatment. So Faron Pharmacuetical. Okay. What's the 174? That's Faron. 174 market cap. They initiate phase 2 part of being study. Okay. So that's good there. MDA patients. Okay, let's look at on Faron. Farn. Let's stick it there. Let me just grab this over a bit. Farn. So Faron Pharmaceuticals. Whoa, look at that. What happened there? May 2018, massive fall off. I don't know what happened there. But that is a bit of a messy chart, isn't it? Up and down, up and down. Don't like that. But good news that they're advancing that there. So it's very good. Let's go down to the most read update on debt funding. I don't know why Vast never put their name, their RNSs. I don't know why. But they got update on funding up 1.69%. And essentially, they've pushed out all the funding requirements. So it helps them a bit, gives them a bit of breathing space here. They've got to pay an extension fee and all that stuff. But yeah. And a lot of people have been talking about, you get some people, some traders trading it. But it's not, it's just literally, look at that. That would have been good to day trader play, but sometimes you can't. That's the trouble with microcap stocks. In fact, 50-day moving average there, it's broke that, and it hadn't done that for a long time. And then it went to a new high. So you could play if you're a fast operator. But that's not the kind of thing I do. Any good news you want to look at? Any news out? Harland Wolff contract award. They've been awarded a further 10 barge contract from Corey Group. Total value of 8.5 million. These 10 barges are in addition to the existing 2 contracts for the build of 23 barges that were awarded in 2020. Good, a lot of work on, haven't they? John Wood says he's delighted there. That's cracking. But there's a bit of a message up. But they are landing contracts, Harland Wolff. Fair play. Let's have a look here. Oh, that's a chart. It spiked up on that. That was that Department of Defense contract, wasn't it? They shared it. It was a £1 billion contract, I think. Since then, it's sort of, as you can see, pretty much series of higher lows here. Broke back up and it's struggling a little bit with that. There we go. I mean, you have to look into the financing of that company, of course, and see where they are on a contractual basis, on a cash generation basis. Are they generating cash? And in fact, someone did ask me this on Twitter on the weekend. Said, how do you know if a company needs cash? I think the best place to go is the last set of financial statements they've released, and then check through the cash flow statement. But also, you've got to be aware whether, if it's a loss-making company, whether they've issued equity since the period ended, because you'll see that in the post-period. So here's Greatland Gold, final results, and they say here they've got corporate highlights and executed 50 million unsecured standby loan facility. Okay, so they've got that as well. So you have to scroll down. When you got a company that's basically not generating revenue, then there's a lot more operational stuff going on here. But you can see here, loss before tax of 21 million, pretty much double from last year. But cash in and out is what's more accurate, pretty much. So you can see on the balance sheet or financial position, 31 million of cash, and actually the same exactly the cash flow statement. And if you scroll down to the cash flow, it's broken down into 3 areas, the cash flow statement, by the way. Operations, investments, and finance. So it's always worth looking at the operations, very important. How much are they losing through operations or generating? If it's in brackets, they're losing that 11.47. So double last year, they've spent, they've used 11.46 million. Is this, is it dollars? Oh, I don't know, maybe Aussie dollars. And then you can see investments here, payments for exploration and evaluation assets there, payments for mine development and fixed assets, that come to 14.5 million, payments in advance for joint venture contributions, 13 million. So in investments and operations, they burned about, 11 plus 26, 37, 38 million. There, I don't know if that's going to continue at that high level. And then you've got a financing, the proceeds from shares here, 63 million of shares there. So they raised 61 from there. But overall, of course, they've still got 23 left. Net increase, because that's increase as well there. So cash at the end of the year is 31. But you think, okay, if they can continue this kind of investment and cash burn, it's a year's worth of cash they got, but who knows? But there we are. They've got proceeds from their borrowing facilities there, but there we are. Okay, let's look at the chart on GDP. Is it moving forward? What's gold doing at the moment? Look at that, starting to rally, isn't it? It's trying. That's a good sign. That it's now above that. Those previous lines of resistance. It's tried to get above before. It couldn't do it. Why? Sellers are coming in and drowning the buyers basically. But now you've had this rise. Let's get a bit of momentum behind it. Tracking rise from 6 to 9 pence. What's that? 50% rise. And it's still above, which is a good sign. Still above this sort of previous resistance, which may now prove to be future support. So I mean, it's not a hard line. Of course, it can bounce up and down below that, but maybe that's the bottom. You get a company oversold that can bounce very strongly. So that's Greatland Gold. It's looking in the chart is looking better than it has done for a while. Look at that. It's come down from 37 pence down to 6 pence. So it's hard. Powerhouse having a bit of trouble with that patent update. They say someone stepped in currently to stay. Third parties come in and put a spanner in the works. They said that their patent attorneys said that's natural, of course. So I'm advised by our patent attorneys there's no significance to this. And it's normal procedural step when entitlement proceedings have been commenced in respect of a patent. So so they're saying that's quite normal. Here's a 10 bag I missed out on. Just lost my patience really. Down here I think it was. And then it went crazy. But again, just looking at the chart, you can see straight away, it's in a downtrend, lower lows, lower highs, and it still doesn't seem like last time that was previous support there at what 0.4, and now it's at 0.25. So it needs to get I need to get a long way ready and start bouncing. But that's a serious downtrend on Powerhouse Energy. Let's just catch up with any comments. The issue using the chart method is right. Let me just stop you there. I should wait till I get over 200. Is that you will miss out on further appreciation of the stock. Right, you're never going to get full appreciation of stock. No one ever gets the bottom, buys the bottom and sell at the top. But if you do try and do that, what you're going to do is buy at the bottom and it'll go lower, probably. And so you never get the bottom. You don't need to do that. You just need to make sure the bottom's in and to avoid a downtrend. And you never be able to sell at the top either. So don't worry about that, because if you try and do that, honestly, you lose money trying to guess the bottom. It's a fool's errand that. So you're never going to get entire, from bottom to top. If you are, you're a genius, and you'd be so well off. You'd be in fact, you'd own YouTube. Okay, Gregory, Plexus Holdings on the move. Thoughts on that, please? Let's look at Plexus. Yeah, they cut the contract, didn't they? There, I think Plexus. Let's look at POS is the ticker. It's an unfortunate ticker, isn't it? That POS. If you know what it stands for. There we are. 18 million market cap. RS here. 175 grand. I don't know how significant that is for an 18 million market cap, but they're the owner of the proprietary pulse grip friction grip method of wellhead engineering, known for its safety, time, cost-saving capabilities. And they've done a wellhead, some mudline. They value this contract in excess of 175 grand. Is yet another example of the growing rental wellhead market for jackup rigs engaged in both plug and abandonment operations and exploration drilling. Okay. So let's look at POX on the old chart. I think is it Paul Scott one of these a while back, but for example, what's your name there? Neshad, I think it is, isn't it? Sorry, I don't pronounce your name. Sorry, I don't know. But let's look. If you try to guess the bottom here, nice rally. But in fact, how would you guess the bottom? How do you even guess the bottom? All you can look at is trends, because you could have said there's a bottom there, but it's gone down from like what 22 pence down to, if you could guess trying to guess the bottom all the way down here from 15 to like 1 pence, and you've been skint. So as you can see here on this chart, if you move that across a bit, it punched up about 200 moving average, right? Then something's happening, because it hasn't that for a long time. There's some movement in the share price, and it just stuck itself on 4.5 pence. Didn't really get above that 4.5 pence for a while. Then it gapped up right here. Okay, That's good. It's kind of quite dangerous buying the gap because it needs to, sometimes they say it needs to refill that. But nevertheless, it went from 5 to 28 pence. It's going down now. In fact, this is looking quite decent because if you can see, previous sort of support was around about this level here, and it's gone down to 40.5. It needs to settle down a little bit, but you could say, the fact it's bounced off here on this contract news is quite good, but it needs to smooth down. What you always want to see is, a settling down of volume, and that will reflect in the price. Where smooth landing will happen. So it may have to go sideways a while, but there we are. I got an alert on Impax management. There we are. There's so someone who I think regularly watches this mentioned this previously, didn't they? Impax. So I always put alerts on the 50-day moving average. You can see there, it's broken that. Now I wouldn't jump in there immediately because if you look at the previous highs are here, it's not even made that up. So we may have to go round and down and settle down a bit before that. V-shaped recoveries very rarely happen. You get a bounce and then a bit of sell. Oh, look at that! As I spoke, it's gone down because people underwater there are taking a bit of profit, if a move, just getting out, bit of liquidity, and that can happen. So what you want there is the fight between the bear and the bulls to just peter out a little bit until there's lower volume, and then there's no sellers exhaust. Sometimes you see a lot of rises happening. That gives the opportunity to sellers to get out, and then once they get out and settle down, then a small amount of buys will come in. But that process can take sort of weeks, months. But nevertheless, that's a bounce there from that. Okay. Let's look. However, a great chance of success. The buyers are sucked by the same signals, assuming no adverse news. Well, you try it, Nashid, right? All I'm saying is, I've done that for years, trying to buy the bottoms, and it doesn't work out. Okay. Honestly, just try and look at it. It's just about money flow. That's all it's about. He owns 3% of Paul Scott owns 3% of Nexus. Yeah. By the way, a small contract with him today. Yeah, got that. I think Paul struggles with indicators on charts rather than price moves, but the main indicators are pretty much universally accepted. So therefore, good at indicating. Yeah, I mean, all the indicators are based off. I would say, don't ever believe anyone who will give you price predictions on charts. You can't do that. Like I said, all you can do, is give a valuation based on fundamentals. That's all you can do. Like, for example, if a company is like let's say a company is like 100 million market cap, and they're doing 20 million of profit. Okay, and within that sector, and their margins are good, and within that sector, generally, companies like that should be on, say, 10 times PE, and this is on so 20 times PE, for example, and this is on like 10 times. And you can say, well, that should be on that level up there. It should be like 200 million rather than 100 million market cap. That will give you, the fundamentals give you valuation levels, but charts don't. I see people do that on using Fibonacci and all that rubbish. How do you know? You can't tell that in a chart. All the chart tells you is what's happened in regards to price action previously, and you can see then that the trend has ended because you can't see where it's going. It's ridiculous. Wouldn't that get you to but Simon, you can't judge the previous recession on this recession. It's completely different. That was where central banks were literally going banks were going through, and there's systemic problems in the banking industry, and that we bailed out by central banks. This is about inflation and interest rates choking the economy. It was the other way around back then. They reduced interest rates. That's why we're in the problem we're in. It's because we're at low interest rates for a long time. So it's a completely different kettle of fish there. Like you say, you had banks going through, and the worry of that, like Lehman's brother just going bankrupt. Really scary situation. It was. I remember the time banks, being nationalised in the UK, and that's really worrying. Recession won't get announced the third week. If we're in, if the third quarter was the third quarter contracting, I don't know, and the fourth quarter it'll get announced in January. So anyway. Michael, what level of subscription do you have on TradingView, Justin? Essential, Plus, or Premium? I think so TradingView gives you a free level up to, I think, is it 3 indicators you can use? I'd mess around that first, and then I think I'm on Premium. I can put it on as many indicators as I want. Listen, sometimes keeping it simple is the genius, isn't it? I agree. We are close. We're not far. No, NR didn't see Paul's progress. The Wall Street crash of 1929 had some big sucker rallies. Yeah, would charts have suckered you in or kept you out? I don't know if they had decent charts back then. I think they drew them on paper. But again, you can only look at individual companies, can't you, on things like that. But again, that was a depression, huge. That was worrying back there. I don't think it's as bad as where we are now. Would it be very insightful for your charting trial was to explain the 20 or more of John's choices? 20 or more. Yeah, I think Paul is the one. Yeah, I can do that. I mean, but the thing is, what people don't understand is it's not just about charts. I keep explaining that to Paul. I said it's not just about charts. I won't touch a company just based on the chart, even if it's looking cracking, even if the trend looks good. If it's a classic chart setup that's looking like it's not going to uptrend, I won't invest in it. So I don't know what's under the hood of the company. They can come out and announce, a discounted fundraise at 30%. If you don't know something about the company, you're going to have debt problems or anything. The sales could be dropping off a cliff. So you need to know, fundamentally how strong a company is. And like I said, I do put that through my spreadsheets and all that. Then, so what to invest in, then when is the chart. So I don't think Paul was getting that. I kept explaining that, I don't just look at charts. It's part of the tools you use. Many of the tools you can use. And the third tool you can use, what, when, how is portfolio management. There are certain things you can't avoid, even if you get the fundamentals right. Because every time you look at fundamental reports, essentially, financial reports, they are 3 to 6 months out of date. Okay, so the market could take a turn against them in the time that that you're investing in, because those, are they still selling as well as that, or are they turned down, or they've gone quiet? You don't know what's happening. So worst case scenario, company fraud. If a CFO comes out and been diddling the books or cooking the books or something, I know it's very rare, or a big contract, being cancelled. Fundamental and technical analysis can't protect you against that. The only thing that protects you against that is a level of diversification and not going overboard into many stocks. So that's the third level, of protection. So again, it's not just about charts. It's investing is multi-layered. And if you haven't got the time to do that, buy a fund. Simple as that. And in fact, a fund should be part of your thing anyway, I think. I think we need S&P 500 to crash until the UK bottoms. Okay, but why are you saying that, Simon? What are you basing that on? In 2008, there was a big concern on liquidity with no money available. Now it's just negative sentiment on liquidity. True, dagger. Greedy Belly. Can you share your valuation spreadsheet? No, it's for my members only. Simon, listen, I've spent almost probably a year making that spreadsheet. And so I had Plexus shares a long time ago, good company for me at the time. I'd be concerned on cash flows at the moment as rental assets have to be built. So very cash negative, potentially short term. I'm wondering why a US company that has given Plexus don't just buy them out as it's pocket money for them. It's a big contract for Plexus, though. Yeah, they didn't have laptops in 1929, but they had technical analysis invented by Charles Dow or Sooner and Age. Yes, they would draw the charts, didn't they? Okay, let's just quickly go to sorry, the front page of Vox and see what else was rising, falling. That's Plexus there, covered. Nice little contract on a Monday morning. It's good to see that. Rises, so Powerhouse, Tintra. I don't believe what the company's doing. Just and no one else does actually. There's £101.50 off on the table, and it's down. It's again trying to help the unbanked of the world. So many companies are doing that. It's a big deal. That can't be done by an AIM company, I don't think. Bushveld. Let's look at this. Sort of, you like your Bushveld, Mrs. Sorry, sir. Production 1,000 million tons of vanadium. That's in this Q3. That's an improvement on Q2. What's the weighted average production cash cost? Is 26.5, so it's down. So that's decent. Sales of 849. Well, that's down there as well, though. Group on track to meet group production guidance for 2023 between 3,700 and 3,900 megatons of vanadium. And end of the year. So, what is this? Okay. They're pleased to report the first set of quarterly production numbers under my stewardship. This is Craig Colton. They're a solid set of results. Solid for the quarter. They made progress there. They're doing a conference call. Let's have a look at what's Bushveld looking like? Bushveld. There we are. There we are. That's still a downtrend. Having said that, will this be the bottom? Hard to say, Okay, all you can do is wait until you get, some net demand and it's not taken up by supply of the share price, and that will take it above here, previous levels, but needs to start, bottoming out for a while. I mean, by the way, these processes, you will see, micro caps, rally quickly and jump quickly, but the bottoming out process does take a while, and you would get the odd nano cap that'll do us of 50-60% in a day, and you can't, there are exceptions. We just can't cover everything, but there we are. This is Bushveld, Power Metals have sold their holding in Kavango Resources, and they've got £556,000 for it. So they basically need the cash, is it? Well, I think Kavango as well. Hasn't the director bought those shares? Well, anyway, director shareholding. He's bought about £500,000 worth of shares, hasn't he? 63. Yeah. So 10 pence would be what? 6.3 million. So 8 pence. Sorry. 600,000. He's bought £500,000 worth of shares there at Kavango. So it's nice that it's not just offloading the market. Where is Power Metals in the chart? Pow. Again, bit of a downtrend there. Not good. Or Kavango. Anyone hold Kavango? Okay. Oh, it's trying to make a bit of headroom there, isn't it? Flat line here. Let's see if it gets above 50-day moving average, but it's gapped down. You can see there's previous sort of support here, and you would say it needs to get above that, pretty much, because it broke that down before. Anything else on the front page? What else I see? I saw something of interest to me. Xeros is I noticed I held these a while back, and took a bit of a hammering because 80% fundraise discount. Luckily, I didn't have much in them. I averaged up and got back in the profit. But it's interesting to see the Dowgate are buying, taking a 5% position in these, because they're not, they're not profitable. They burn a lot of cash, but I do like the tech. Anyway, anything else? Fallers, Grit Real Estate. Oh yes, Surface Transforms, again, big faller. Capturing a fall in life is not good. In fact, let's look at that. Let's look at that chart. Surface Transforms. Yeah, they can hang around there for 80. People buy them. I mean, it did rise a little bit in that day, down 31%. In fact, but they can bounce along the bottom for a long time, and then of course they have to release news about funding. Then I'm assuming they haven't done that, have they? Because they did say now they probably need funding. Trading update. No, they haven't. Okay. All right. Sorry. Let me just go. Any more comments? Any more comments there? When is membership reopening for your investor club? Next year, probably February. There's some big updates happening. Frasers are taking a bigger position in Asos again. Have they? I did notice a day that Boohoo were on the front of the BBC, saying they've gone back. They've been caught doing something. I can't remember what it was. In fact, let's look at it. What was it? BBC Business. Business News. Boohoo breaks ethical pledge. There we are. Fashion chain Boohoo has broken promise to make its clothes fairly and ethically. The BBC Panorama. That's not good. Is that on tonight? The BBC Panorama. Yeah. Okay. That's not good. Asos is Mike Fraser. He's back in there, is he? Tim Apple, Mike Fraser, Elon Tesla, Jeff Amazon. That's like 19.5% now. How's the market look? Yeah, it's just an asset for him, isn't it? Yeah, it's just a flatlining as well. So you can see there pretty much. You can look at that alert. Put an alert on there because that's 455. It's pretty much it hasn't closed above that. If it closed above that, that's quite significant. I mean, what I'm saying from a charting point of view on this stock, because it's never done that for what since May 2023. So you can see why that would be significant. It means the sellers that come in may not be there anymore. Anything else, ladies and gentlemen? Just quickly look at UK's recession yet. There's a couple of news here about 2/3 of Britons spend less this Christmas. That's what they're saying. The cost of living, that's done by, and also a survey found that more than half of UK adults were not planning to take advantage of discounts on Black Friday, Cyber Monday, or Boxing Day. This is the thing about annual oil and gas licenses planned with net. I don't see the point of this, though. It seems to me it's a shoo-in that the Conservatives are not going to win the next election. Is that? I mean, and I'm not a fan of Labour or whatever. I'm just saying it seems that the polls are suggesting that. So they're going to plan annual licensing rounds. I think they've been done just randomly recently, haven't they? But that won't be, held up by Labour. They'll just cancel it. I mean, Labour did say it will honour its existing licenses granted before the next election, but would not allow any new ones to be granted if it won power. In fact, I was listening. It's worth listening actually today. A lady was talking on Radio 5 Live. Wake Up to Money. And she was saying the trouble is, hydrocarbons used in everything. So you can't just stop oil. I mean, medical equipment, it's used everything. Some of the technology we use here, hydrocarbons used. You can't just stop it. And it's true, actually. You forget about that. You forget, And so they're saying that these they have to be, the minister said projects would have to meet net zero targets and claimed the policy would guarantee energy security. It's very interesting. So there's an argument about trouble is stuff produced in the North Sea, it's not sold to the UK. No, but if we buy it, if we don't buy it from there anyway, it'll travel from around the world. And also, the actual production is not as bad carbon footprint wise as the combustion of oil and gas, because that's the problem, isn't it? So anyway, car sales rose 14% last month. Welcome to our. This is the Guardian. 15-month, so climbed for 15 months running. Wow. And apparently electric cars are increasing, but it's mainly with businesses and corporates because, of course, Rishi Sunak has moved the goalposts. And so it changed my mind, actually. When you change your mind on something like that. So we were looking at EVs, and I thought, another 5 years. Don't bother now. So we're probably going to get a hybrid. Yes. Anyway, let's just look at the final comments. Anything else? No, I'm not accepting any members at the moment. Sorry. Do you tell your members when you sell on the day after? No, I do a weekly update of all my holdings and where I'm going. Yes, NR, maybe it's tax efficient to rent. Plexus has done some IP on these wellheads, so it's worth buying for a big company. I would export. Yeah, I would never. Another thing, I would never buy a company or invest in a company because you hope it's going to get taken out. You should buy a company or invest in a company because it's a good company, because you could wait there for years and it'll never get taken out. KitKat reported quite good results. Oh, Kitwave, KitKat. Kitwave's reported quite good results, but the 50-day moving average just crossed under the 200-day buy results on the chart. So Kitwave, were they? I don't know. Is that UK listed? Kitwave. I've never heard of Kitwave, but thank you for bringing my attention. Let's have a look. Kitwave trading update. So what do they do? The wholesale, is it the delivered wholesale business? That's a pre-close trade update. Following a strong performance in the first half, positive momentum continued across all groups divisions as a result of following a significant upgrade. The board expects full year results will be in line with current expectations. They do say it's a tricky market, trying to mitigate those. And what is it? Okay, look forward to presenting final results. Yeah, again, I would wait for final results always, because when they have the final results, because as a trading updates are highlights essentially, they're not the full. What's the TikTok? What's the TikTok? What's the ticker there? KitW. KitW. Let's look at the chart of KitW. KitW. Let's see that how many charts we looked at today where we've not seen that trend? Kitwave's been uptrend. You do tend to find things rally towards news or trading updates, but slowly rolling over here now. So but that doesn't mean it's going to fall off a cliff. So to me, that's a good opportunity. If it's a good company doing very well, they've rolled over a little bit. Just put an alert in the chart. I mean, it rose today. Someone's come in and sold, obviously, because it went up to like almost breaking this previous highs at 279, and now it's come off a bit. But it's worth seeing. Is this sort of area here? Is this decent support? Because you can see from 240-ish. It'll roll round and further, and just let it settle down. Again, patience. That's the problem I haven't got. I haven't got any patience, but I've had to try and be patient because I've realised the times I haven't been patient, it's cost me money. So, you got to learn, haven't you? So just have a bit of patience. Yeah, it doesn't hurt you sitting in cash, by the way. I've had cash for quite a few months now, and yeah, it doesn't hurt at all to sit in cash. And in fact, some of the stocks I've sat by and waited and looked at, they've just gone down. Okay, I'm not gonna... So there we are. Marvelous. If you can do that in the bear market, you got more time to sit around and do some research rather than just because in the bull market things can really rise. But now is the time to research. Okay. What is my current best performer? I'd say I've doubled on Long Life. It's quite a liquid. I'm waiting for the results to come up on that. About 70. What about? I'm up about 70% on Dusty Farmer. I think I'm about 25-35% on good energy. There's only two stocks I'm down on, but because the way I leverage the portfolio, I don't hold much of those. If it doesn't start going in the right direction, I don't average up. I don't average down. I average up. Therefore, your portfolio is weighted towards your winners rather than your losers. Okay, thank you very much for that. I just put the heater on half an hour ago, and it's so hot in here now in my little office. So speak tomorrow. Have a nice day, and don't forget, hit that like, subscribe button if you could, and download the Vox Markets app there because it's free of charge, and you get notifications sent straight to you, no cost. All you have to do is follow the companies you want to follow. And they're sent to you. Thank you very much. Bye-bye. Speak soon. Bye-bye.